Can Carvana bankrupt me? I don't know. How willing are you to short it? I really like the timing on my put debit spread there. Anyway, let's see how this looks. So we closed kind of close to the top of the market maker's expected upside range. We did tap it briefly after the collar rolled off. That opened up the ability for price to move rapidly to the upside. We talked about that. We struggled a little bit at the 30 level, but ultimately broke up and found that move to the higher range. This probably won't hold up. Gamma Max is really close to spot. We have a lot of data in the morning. We have both Jolts and ISM manufacturing, neither of which I think are going to be super great. I mean, Jolts has been on a decline over the last several months. If it continues to be in a decline, that'll push Fed fund futures back up. And but for today at least, Bull's very much enjoying the additional leverage granted by JPOW's indecision and inability to stay totally dovish. It's almost like they cut rates 50 points and then they're not going to ever touch them again. Futures, broke that 57.9875 level, moved up, came fairly close to retesting the prior high, but actually got rejected a bit short of it. So that continues the downtrend, although very slight. A failure of the local support here at 57.9875 will then reopen a potential test of the long-term trend down at like 57.60. Commodities kind of flat on the day. Not too much movement. Silver and copper retreated after surging last night. Oil up a little bit today, so are grains. We may start to see some more moves in commodities, but it will be dependent on the strength of the yuan, probably, and whatever's going on with the longshoreman strike. So try to stay abreast of that news. Dixie got a huge rally off of JPOW's very indecisive speech, where he really didn't land anywhere on Fed monetary policy. And we saw yields move up, especially the 2 and 5, but also across the back end of the curve. That same move drove reversal in correlation. So after this morning's breakdown, we see correlation tightening back up again as leverage returned with the rise in the dollar against the yen, which can be seen here. 10-year leverage moving up alongside 6 and 3. Forward yield on volatility in turn with that is also going to move up, and the yield curve is moving back towards inversion, very slowly, not totally there yet, but is slightly sliding that way. Bond vol is going to be elevated today, which will coincide with the move up in correlation. Skew kind of turning a bit around on Friday after falling for the last 3 days. With the quarter over now, we may see some of that positioning shift again, and we may see skew continue to drop, which is bearish. 72.56% of the S&P above its 20-day moving average. Correlation on VIX between VIX and VIX futures rising on the weekly, but coming down on the daily. So still higher week over week, but down consecutively over the last 5 days. That spread widening is showing a little bit more short vol coming in, although that may not persist, but do watch that for a reversal in the trend. Fed fund futures really got the brunt of being hammered today, falling below 3 rate cuts for January, now at 0.71, with the JPOW implying only 0.5 for the remainder of 2024 is currently being considered. That puts us at a retest of the prior high, but still just consolidating in the same range. I will say tonight's close, not a failure, but also not a breakout to a higher high. So still trading technically inside the peak from last Thursday, a failure overnight or into tomorrow morning that saw this tumble under 57.33, or more importantly 5700. Could be the first signal of a larger and continued downside move. Something I do want to cover that I didn't get to cover in last night's weekly technical update is going to be the quarterly, because, well, the quarter wasn't closed. So this quarter did close up 5.53%. These are starting to moderate a little bit. After October, October was, 11%, then 10% in Jan, 3% in April, 5% this month. The tails on them are getting a bit longer. Prices are diving a little deeper to find buyers. And if you look at this, the buyers have really stayed down here, right? And the rest is, being driven by short vol squeezing out on the call side, right? So much of the volume traded range in these candles, that's kind of just where, most of the volume is happening, and that's where we're seeing, short calls getting squeezed, especially in, quarter four, quarter one, right? Quarter two, we started to see a lot less of that. This quarter, we actually had to dig pretty deep to the downside to find any buyers. I think our low was around 51.1926. Eventually, the hope would be that we find fewer buyers to the upside. So the next quarter would be somewhere this range, continuing to flatten out. Who knows how deep that would go? Maybe there. And then, that would project like a failure on the quarterly as the cycle winds down in like quarter one of 2025. And that's about in line with earnings expectations for the S&P 500, but something to consider. I don't really pull out that far on technicals very often, but we are getting to a point where like upside risk outweighs potential returns from the technical side of things. What's that? Monthly? I mean, monthly failed to re-break the all-time high and closed below it, which isn't bad. We closed close to it. If today had closed under 57.33, that would have been a bearish signal into the beginning of October. Not yet, but an open tomorrow below 57.33 could be that. Is this the weekend stream now? No, I was just covering some stuff. Anyway, I'm gonna go take some medicine and lay back down. I'll see you guys later tonight. Have a good one, everybody.